Hey guys, good to have everybody. Today we have Lucid and Canon. And as usual, everything on this channel is for educational purposes and is not intended as financial advice. And just some background on this format. So it isn't my original idea. This has been around since 2013 as far as like what people have been trying to do. Basically just to get people together and talk about their vantage point. And yeah, it happens on Discord, Telegram, TeamSpeak, but this is a little limited format that gives people the mic for a little bit, their chance to talk about things. So ideally, we're doing this once a week, noon on Friday EST. If you'd like to take part, just let me know in the comments below. And without further ado, so Lucid is going to do the bull case. And again, these aren't their personal positions necessarily, but positions they were assigned to discuss. Okay, so don't don't give them hell based on your own personal assertion of what you think they should be saying. All right, so Lucid's going to do bull-ish, and Cannon's going to do bear-ish, and we'll start with Cannon. Ideally, it's less than 10 minutes per person, just because of, no one wants to listen to like 40 minutes of random people talking about random stuff. So try to keep it succinct if you can. If not, it's okay. And yeah, so Crypto Bear, why don't you, or Crypto Cannon, why don't you get us started, man? And if you want to just talk about like, we can show your Twitter links or anything else you want as well. So go ahead, my dude.
Hello, everyone. I thank you. This is actually the first time I'm doing this, and I'd just like to start by sharing the Bitfinex daily. And if you see the 350-day just crossed above the 200-day, and like I mentioned just before we went live, that before this event, I was how they say on crypto Twitter, I had some hopium in me. Maybe I'm not going to hide it. Maybe because I'm not at a loss, but sort of I didn't sell at the top. You know, this feeling that you regret not selling at specific. At 19, then 17. So that might be the reason. But after this happened, and I went back and checked, maybe for 400 days after this event last time. If it's a bit slow, I apologize. I will just move back so everyone can see. We had a continued bear market and it continued to sell off another 50%, I think. I actually brought it all up. I don't know if it was a good idea, but you can advise me later on, I suppose. Yeah. We had a further sell-off and it continued for another 400 days. So now I would be convinced that for another 8 months minimum, based on the technicals, we will still be getting sell-offs. And I'd say within the next 60 days, we will probably break below the 5,800. And then it depends. Go to maybe 4, because there is a trend line. But again, I only got into technical analysis because of cryptocurrency. So if I'm bad, you can tell me. I'm fine with it. But based on this trend line, maybe we'll hit 3,600, 4,000. But again, there's nothing saying that it will hold. And I don't believe that because people might, Lucid did speak about this before, there is miners. So people will say that there is a cost of production. I don't believe that is a problem, because if you actually check, on average worldwide, the cost of production is, I might be mistaken, around 5,000. But it's really interesting. There are places in the world where you can get 1,500, you can get 2,000. And me, because I've been based in different countries, for example, I'm in Russia right now. If you, with the right connections, you can bring that down to the most minimum. Of course, your average person won't be able to do it. But if you have, I don't know, if you're a big company like Bitmain or Bitfury, or if you're a big company, you can get that. And I've even had, because I'm active in the Russian community as well, I've had people approach me and talk to me about it. Of course, I don't have the I don't have the finances to organize something like that. So I think easily 3,000, 2,800, and I don't know. I would feel pretty bad if it goes any lower. I hope it doesn't. And
if it goes lower, it's your fault, Kenna.
yeah, maybe. If you
So
check,
any reason, let me just interrupt you for a second. Any reason you chose those two EMAs? Because typically it's like 5,200, but I'm just curious, like any rationale behind that?
well, the two. I'll be completely honest. I always try and do that. The 200 is because when I first started reading and educating myself in TA, that was the one that came up quite often, and I picked the 350 because it seems like the year one, the 1 year, almost 15 days off. And if you go on the weekly and you compare it, you can see that. Again, I apologize if it's jittery because it is for me. I don't know what it's like for you.
No, you're good.
You can see that in the previous bear market, it actually touched the 30 twice. It even went below once. Here, we haven't even broken the, I don't know if you can call it support, the 40 RSI. So this has room to go. And with all my, like, I would be happy for the crypto community if it goes up. But I actually believe that it will break below the trend line, and we will maybe come somewhere around here. If you can see my like 3,000, around 3,000 ish, and around summer 2019. And if I just move on to the fundamental analysis, because I don't know, yeah, people will say that, oh, but there is a institutional investment coming in. Yeah, but with institutional investment, these people have the opportunity to easily short, to wait. I mean, it's the retail and the small institutions that have problems because they have, I don't know, salaries to pay. They have a lot of cost. But when people, not now, but before, I would read a lot of posts about, the Rothschilds, the Soros coming in. If they truly studied this and they came into the space believing that, look, this Bitcoin thing is worth something, and if they have the opportunity to play at the market and make it go even lower, wouldn't it be better for them? I mean, just imagine you're at a position like that. Wouldn't you do it? I mean, I'm not saying I'm evil, but I probably would, because if I believe something can be worth 50, 100,000 one day, why wouldn't I just make it worth 3,000 and buy it cheaper? That
Sure, yeah.
And another thing that I'd like to say is I found this, someone posted this off Twitter, so I don't know exactly who did it, but I'd like to thank that person. And we're talking about decentralization. And again, me as someone who doesn't know much about decentralization, I don't think 19% of the supply being held by 100 accounts. That's assuming that 100 accounts is different people or organizations. Let's just say some of them are uh, cryptocurrency exchanges. So we can say it's not even 100 accounts. We can say it's 1,000 accounts or even more. It doesn't matter. It's still, that seems very centralized for me. Again, I don't have a degree in economics. I finished marketing, but that seems very centralized. And Ethereum's even worse because 35%, that just shows that most of the, and this is known as well, that most of the buying is for speculative reasons, and that no one's actually, I mean, me myself as a non-tech savvy person, I have a few wallets. I know how to use these things because I learned. But if you talk to most people, I mean, they don't even know how to bring their money out of exchanges. Of course, in the US, in Europe, that's not a problem. But for example, in China and Russia, that is a problem, and they don't know how to do it. And I would have people I know calling me and saying, "Look, I have, I don't know, 1.8 Bitcoin on this exchange. How do I get it out?" That just says, I mean, how the level of education is very, very low. And especially if you go on some of the Telegram groups and you just read some of the stuff people say, at that point you actually feel like you're extremely intelligent.
Sure, yeah. So that was Meltem Demirs out of CoinShares, Athena Capital, whatever you want to call it. She was the one who put up, somebody in their team made that graphic. But yeah, the distribution is interesting because everybody's sort of told who knows better to in order to stay more anonymous than not, to separate your coins, keep things unlinked so chain analysis can't find it. But in reality, a lot of these big wallets are pretty condensed as far as where they sit. So like it is hard to believe like that those numbers would make any sense as far as people can just split it up and decrease the density basically. But in reality, if you actually try to look at some of these wallets with like hundreds of thousands of Bitcoin, it's pretty easy to track it all down. Just like I did one last night that was sending 10K Bitcoin just to random places, but you can see all of the breakdown. So if it says 97 or above 50% for some of these, you know it's got to be even higher just in reality, like you're saying, because most of the stuff's pretty concentrated. All right, well, cool. Thanks for that. And we're going to move to Lucid to discuss anything he can on the bullish side.
All right. Well, yeah, I'll quickly just preface this by saying that I apologize if I'm a little bit sloppy because it's 2 a.m. where I am. But and also I won't be necessarily offering direct rebuttal to the points made just then, but I'll just be offering more a general perspective on a range of factors that are likely to precipitate bullishness in the future. So the first point I'll quickly make is that fundamentals are not at all important in the crypto space. It's purely speculative momentum and capital flows you want to be tracking. This is partly because of the lack of accepted fundamental valuation frameworks. It's also due to the fact that the space is new. And also, as sort of perhaps rude as it sounds, it's also because the average market participant is relatively unintelligent, at least relative to other capital markets. So although it's fairly obvious, the three primary factors to sort of look out for in terms of what will lead to the formation of the next bubble is retail capital, institutional capital, and UX and scaling developments. So I'll just do a quick little dive into some of those and just maybe try to elucidate a few things that you should be looking out for. So retail capital remains the primary factor influencing price movements and will do into the future, including into the next bubble. So you hear a lot of noise around institutional capital, but there's generally speaking a lot of misunderstanding with regards to the role that institutional capital plays in the market. So institutions aren't necessarily going to be bidding, into thin order books and shooting the price through to 20K as like that which occurred in late 2017. The primary role of institutional capital is that it takes liquidity from the back end, which results in a more general exertion of upwards pressure on prices. So and basically the reason for this is because institutions buy from OTC desks. OTC desks source Bitcoin from miners, exchanges like BitMEX who charge fees in Bitcoin. They obviously other OTC sellers. And then, if OTC demand from institutions is greater than the sort of net supply of those factors, then of course OTC desks will have to aggregate bids across spot markets. And yes, of course, that causes significant upwards pressure on prices, as would be expected. But of course, they're not going to aggregate bids into empty order books, on a breakout. They're not exactly going to be, generally speaking, they're not going to be shooting the price through the roof. What it will mean is that it will gradually reduce the extent to which Bitcoin can pull back, correct, and capitulate. And that's basically because of the fact that, not the fact that, but just generally speaking, if you're trying to aggregate a large buy order for Bitcoin, the best time to do it is obviously when it's pulling back, because that's when there's a strong amount of selling liquidity that you can easily, buy into and accumulate into. Okay, so now I'll quickly move over to the role of retail money. So now I've just, briefly outlined the effect of institutional capital. In terms of retail money, everyone's sort of well and truly aware of the fact that it's basically sort of market infrastructure that we're looking for with regards to the sort of fundamental factors that will influence the next bubble. So everyone's talking about the ETF, which is of course a huge thing. The other thing, of course, is regulated exchanges. And although this is very obvious, the general idea is that what you're doing is you're effectively opening up the gateway to a much larger sort of pool of capital or liquidity pool, you could say. And that's obviously because a significant portion of the sort of capital. Sorry, this is not a very good way to put it, but basically, there's a huge amount of capital in the world that isn't sort of tech savvy enough, or necessarily perhaps sort of risque enough to be willing to participate in crypto markets as they exist currently. So, of course, that's mum and dads. That's pretty much anyone who isn't either has a relatively high risk tolerance or is has significant technological expertise. So yeah, of course, you're basically opening up the market to a significantly greater pool of liquidity. But there are sort of basically two primary effects that comes from the establishment of an ETF. One of which is narrative, and people sort of, I think, overestimate to some extent the sort of immediate impact of an ETF, because basically an ETF opens up access to a much broader liquidity pool, which of course will, generally speaking, tend to exert upward pressure on prices, because if there's more money that is able to flow in, you would expect a greater portion of money to flow in and whatnot. But when an ETF is initially approved, obviously the most significant effect will be speculative, and it actually is possible that we could see a fake out or a sort of a false break rally following ETF approval as speculators pile in, because the fundamental sort of component of that of an ETF approval, which is sort of a greater quantity of capital pooling into the space, won't necessarily manifest immediately. So that's one thing to keep in mind, is that until we do see that market dynamic change, and by market dynamic, I'm mostly referring to a change in the sort of net direction of capital flows. So until we see basically more money flowing into the space than flowing out, would be the simplest way to put it. It is still possible that following an ETF approval, you would see further lows, which of course could create sort of the ideal capitulation, because in such a case you would have very significant despair in that the sort of savior narrative that everyone has been espousing would have supposedly failed, insofar as the price dips after it manifests. Of course, that's an excellent buying opportunity. So yeah, and the other thing I wanted to mention was drags on price, and this is something that sort of people don't really sort of mention a whole lot. But I mean, basically, in my opinion, I actually think that ideally, if we were to see another bull market from here, we would actually want to see further lows and some kind of capitulation, and also we would want to see the manifestation of a number of negative news events that haven't yet come to fruition. So the reasons for that is that, I mean, quite simply, when you have a sort of serious speculative euphoria and run up like this, not only there's basically a significant overhang of potential selling pressure in investors who are holding significant portions of different coins, sorry, and are relatively wary about their investment decisions. They watch the market; they're unsure as to whether it's going to continue up further in the future, and eventually, of course, sort of some of them end up cutting losses. So basically, this overhang of potential selling pressure it sort of explains, in part, the reason for which the market dumps significantly on negative news, and that's because there is, when you have sort of the market dynamic we're faced with currently, there's a significant portion of sort of invested capital that is unsure about its that is uncertain, and is prone to sort of dumping upon any kind of sort of negative indicators emerging. So ideally, to flush that that overhang of potential selling pressure out, ideally you want to see serious capitulation, and of course we did get fairly significant capitulation in February, but since then we've basically been ranging sideways. Of course, there's been fairly significant swings to the upside and downside, but we certainly haven't seen a capitulation event of the like that we saw in February. So, funnily enough, although I am arguing the bull case, I mean, and again, sorry, this is not a prediction, but what I'm basically saying is that for the ideal bull case, you would want to see a further flushing of potential selling of potential selling pressure. And the other thing you'd like to see, sorry, my throat, but and the other thing you'd like to see is basically the sort of dredging of a number of potentially, or actually almost certain negative news events that we've sort of accrued through this speculative euphoria, but haven't necessarily manifested as yet. So one of which would be Tether. So I mean, quite simply, I'm not necessarily going to state a firm position as to whether or not I think it's fraudulent, but basically you'd either want to see Tether fail and the subsequent capitulation, or you'd want to see Tether become transparent. So that's one example of a news event that we would like to see resolved before the formation of a future bull market, because it does represent a potential, Achilles heel, so to speak, that could sort of really take the wind out of the sails of a potential bull run that could begin to emerge. So you want to see the dredging of things like the tethered potential news event. You also want to see things like the sort of Mt. Gox situation play out, because of course I think there's something around 100,000 bitcoins, which is, at current prices, or I mean, at whatever prices, is a huge amount of potential selling pressure that could enter the market at any time. Yeah, and there are a number of sort of potential sort of negative news events like that, which we've accrued throughout the speculative euphoria, and we haven't actually sort of dredged out of the market yet. In fact, throughout the course of this bear market, we haven't actually seen any highly significant negative news events occur. Although sort of people mention sort of regulatory uncertainty and whatnot, that same regulatory uncertainty applied all throughout that bull market. Throughout that bull market, I was sort of quite acutely aware of the fact that the vast majority of ICOs were, going to be deemed securities. I mean, they haven't been deemed securities yet, even now. I mean, they have been in sort of statements, but we haven't really seen the sort of mass scale, prosecutions that are possible, not necessarily, certain to occur, but are possible. But yeah, I mean, generally speaking, all the sort of regulatory uncertainty that people talk about now was also in existence during the bull market. It was just that because prices were increasing, then that was not where the narrative focus was. So the only difference right now is that the narrative focus is on whatever potentially negative news there is. So yeah, my point basically there was just that we haven't actually seen any significant negative news events. One other thing we could see, as I was just mentioning then, would be an actual genuine serious SEC crackdown with ICO sort of funds being returned, founders being sued. I mean, because a scenario like that, I mean, this is purely speculative, purely hypothetical, but it's just one of those things that want to see all of this pain sort of manifest. You want to, because in such a case, you do get a capitulation. You do get the sort of dredging of these potential negative news events, and you sort of remove all that selling, the potential selling overhang, and then at the same time you get the development of ETFs, you get the development of various other sort of financial products that enable retail investors and institutions to invest in the space. So basically, what you get is a situation where you've manifested all of the potential selling pressure, and you also have just opened up a huge pool of bidding liquidity, which basically means that it's fairly easy to establish an uptrend. And of course, speculative euphoria it basically lends itself to crypto quite well. Obviously, because you have constrained supply, you have genuinely promising technological innovation, and a number of other things which I won't necessarily delve too far into. But I suppose the key takeaways would be. I suppose there are a number of takeaways. It's hard to condense it down, but sorry, I'm rambling a little bit because I'm not very sort of structured in this. I wasn't sort of, I didn't actually know I was going to be speaking until about half an hour ago. So I'll probably end it there, and without actually tying it up sort of succinctly. But if there's any questions or anything else that we can further discuss, that'd be great. Unfortunately, I can't hear. That's a very strange sound.
I also can't hear.
Yeah, I think there's something wrong with your microphone. Yeah. I'm not sure exactly what to say now. Your audio is
Can you hear me now?
I can hear you. I just I'm pretty sure. Yeah, I can't hear. All right. Well, in absence of anything further, I'll quickly just mention that what I mentioned there was not necessarily a prediction per se. I'm not saying that all these events have to manifest for the formation of bull market, but what I'm basically saying is that for the ideal sort of conditions for a bull market, you would want to see this stuff manifest, and you want to know that that's what you're looking for, because then if you do see this, if you do see these negative news events happen, you do see the dredging of potential selling overhang, and at the same time you see the formation of capital products that will open up liquidity pools, then you know that that's when to enter the market. So not a prediction, just a sort of a comment on different things to look for.
Can you guys hear me now?
Yes, we can hear you now.
Okay, sorry.
I got scared for a bit.
Yeah, thanks for that, Lucid. Let me see if I can get my I mean, I agree with all your points. One other thing you didn't mention was the BitMEX. So BitMEX gets all their fees in
Yes.
crypto, right? And
no, I wasn't the sort of the bearish side of things. Or at least I was trying not to. But yeah.
Oh, that's okay. But yeah, you mentioned it, and I've been talking about it with a few other people as well. But so they get all their fees in crypto, which means they most likely sell that somewhere. They're getting like 65 million a day, I think. So they're probably not selling it on market like spot, but they're probably selling it somewhere OTC, either on highs somewhere. Who knows what they're doing? But there's no way they're keeping all that.
Well, I mean, of course, they definitely can't. They definitely can't keep all of that because they've got to satisfy investors and whatnot. But yeah, so I mean, to me, the two sort of primarily fundamental selling pressures that are sort of being exerted on the market right now are, as you mentioned, these sort of exchange liquidations from exchanges like BitMEX, and also, of course, mining, which sort of in terms of the role of mining, it actually exerts further sort of downward pressure on the market as the price drops because miners have to sell a greater portion of the block reward to cover the cost of electricity.
Yeah, I think the mining thing is like beyond silly, because if there's any person who's more logical than a miner, I've not met them. They sure, they need to sell for electricity, but for the most part, these big guys, which will be the ones that will continue, will not sell. Will sell minimally. Yeah, we're making like 1,400 BTC a day or something, but that downward pressure overall should be minimal because most of the miners who are successful are the big ones. They're getting most of the hash rate. They're getting most of the block reward. Yes, it's going to continually squeeze out the lower hash rate miners because mining profitability is just continually going lower and lower as hash rate goes higher and higher. But overall, like, that is just the most tired argument that I've heard. Just because I talk to miners who are big and giant, and for the most part, yeah, they sell what they need to sell, but they're not literally like market selling every day everything they get. So yeah, it's downward pressure, but I think it's over exaggerated. Like,
to be honest, I think that even if they are forced to sell, there are even the small guys who are, or let's just say the medium-sized guys, they can find different places with cheaper electricity. There's always, I mean, from what maybe I could be mistaken, but from what I know, there are many places where you can get very cheap electricity, and it might not be sort of 100% legal, but I mean, Bitmain doesn't play fair. We all know that. In business practice, a lot of the times the big players don't play fair. So if they can get it for free, why wouldn't they? And there are ways for them to get it for free.
Yeah. So it's a bearish, it's selling pressure, yes, but I think it's over exaggerated. I think it's impossible for us to quantify it, but it's worth considering. But
yeah, so what I would say, I definitely agree that of course it's potentially over exaggerated and you can't quantify it. But sort of my point was more just that when prices sort of fall, the sort of extent to which that affects the market negatively increases because you do have to sell a greater percentage of the block reward, even if it's still a minimal percentage. You're trying to hold, the majority of it for speculative reasons. You still do have to sell a greater percentage of the block reward to sort of cover your sort of cost of operation and whatnot. And for companies like Bitmain and whatnot who are sort of playing on IPOing, they can't necessarily sort of risk their profitability and their sort of quarter to quarter results on sort of blind speculation. Completely. I mean, it's sure it's possible that they do that to some extent, but to me, I definitely would say that the percentage of the block reward that they're selling would definitely be higher now than it would have been previously.
Sure. And I'm only adamant about this point because it was talked about a ton throughout 2014 and 2015.
All right.
And the idea, it's like airplane travel. When airplane travel goes down, like after 9/11 or whatever, the idea is that the cost of revenue or whatever prior to that sort of pays off the rest of it for the remainder. So, the run up we had in 2017 ideally shields any miners who are at risk of going under from overhead or whatever in these down months, because they made so much money at that time. So let me just wrap up and say that, yes, Shorts are again nearing all-time highs. The question is the short trade the crowded trade, or is the expectation of a short squeeze the crowded trade? I'll leave that up to you to decide. And my narrative is still this Wyckoff thing. Now, this is just a roadmap. It's not necessarily where I think we're going exactly. This is based off some guy named Wyckoff and his general observations of market movements and accumulation and distribution. One thing that is interesting is that you could argue that this is a giant descending triangle, which of course has a bearish downside expectation. And you can compare this to almost every altcoin that did this on the USD pair. You can compare this to silver, which did this on the USD pair. So the thing to think about is, why hasn't that happened yet? When will it happen? What will it look like if it happens? What's the low going to be? The fact that we're making lower lows and lower highs is more bullish than bearish to me, but I agree that there's definitely bearish concerns on both fronts. So guys, thanks for tuning into this one. Be sure to follow Crypto Cannon and Lucid TA on Twitter. And if you'd like to participate in next week's bull bear debate, just comment below or hit me up on Twitter, and happy trading. Let me figure out where this is. Thanks, guys.
Thank you very much.
Right, thank you very much.
Thanks for having us.
Yeah.